So role of the finance function is very interesting. Either they have to invest or they have to finance. So they can't sit idle. If you have money with you, you have to invest in a capital asset which gives you good return. You have to use that money in funding your routine operating expenses that you call a retail asset, or you have to give that money back to shareholders in form of profit and dividend. How do you use your money is very important. But at the same time, effectively utilizing and raising finance is of equal importance. How do you raise finance? Finance is raised either by diluting own equity. When you raise as a startup, when you go, you scale up, you dilute your equity and get some money. Or you go with a collateral based or a collateral free loan to a bank or NBFC. Or your company starts earning enough to sustain its operation. But it generally happens after 2 to 5 years. So first few years, it is very important you take investment and financing hand in hand. You have extra amount of funds, immediately park it into liquid funds. You immediately need those money. You should always look that you first deploy liquid funds. You use fixed deposits. You use current deposits efficiently. Because investors comes with an expected return on their investments. So what are the expected returns been met? Have they reached the goal they wanted? How do you ensure it? Investing and financing go hand in hand. You want to find a balance into it. It's really difficult, but finance team does that. The investments must meet 3 important criteria. Do they really add value to the shareholders? If not, do they really have an understanding what shareholders want? Are the money being raised properly at a good cost? And if all those conditions are deployed, is money utilized efficiently so that investor expectations are met? The investment criteria should also be done taking into consideration risk aversion. What is the expectation of a shareholder? Is he ready to take risk? Have you already talked to him when you took the money from him? If not, ensure what risk appetite an investor has. So investment has to be done accordingly. If you have taken high investment risk, have you hedged that risk? Have you covered it through your banking hedging limits? If you are financing it at a very high cost, you have to put it in the high risk investment zones, because more the risk, more the gain. More the gain, more the happiest investor. But yes, there's a word of caution. One has to be careful. What is the limit of my taking a business risk? To an extent, is investor ready for it?